Welcome back. You're watching Big Deal, and we have two large DFIs operational here in India, active here in India, right here with us on Big Deal. So let's continue talking about the impact-based investment and the key themes that you mentioned. Neha, tell us about one successful example of an impact-based investment in India, which showed the results that you were expecting at the onset.
Very difficult to pick, one investment when you have such a rich history of investments, such a long history of investments in a country like India. So maybe I'll probably do a disservice if I only pick one name, but I can, top of mind, a couple of the examples that come to mind. One is the MFI space, the microfinance space that I talked about, and IFC's role and IFC's sort of impact in that space, and how that space grew and the impact it has created, we all know about. Another example specifically that comes to mind is the affordable housing space, where one of our fund managers, large fund managers in India that we backed over the last decade or so, called Multiples, invested in a company called Vastu. And that was close to a decade ago. It's in the affordable housing space, one of the fastest growing companies, done extremely well. IFC's recently backed it on the direct side as well. And we saw the growth, even though it was an indirect investment, we saw the growth, we saw the impact that it has created over the last decade. Another such company, another such fund manager is Lighthouse, who's invested in many investments, but one of the companies that comes to mind is Bikaji Food, which is now a listed company. But when they invested, it was a company in Bikaner, one of the largest employers there, largely employing women. And it's now one of the largest, growing tremendously over the last 10 years, and has led to significant job creation, supply chain formalization, one of the largest ethnic foods or namkeen company in India today, and it's listed on the bourses. Another example that comes to mind is GF, the fund manager that we talked about earlier, and the investments that it has done in the resource efficiency space.
Yes.
And I apologize to all the other fund managers and all the brilliant companies that they've invested in that I can't take their name for possibly.
Yes, but that's a great example, Neha, of a local homegrown company from a small place in the country, and also backing the homegrown entrepreneur. Srini, what would you say in terms of the, kind of impact that has been created? Of course, job creation is one important aspect, but India remains your key market.
Sure, that's true. As Neha said, there are a lot of examples, and my apologies to a lot of fund managers. The one which is very close to my heart, and I've been seeing this more recently, is actually a dairy business called Akshay Kalpa, which is a fully integrated direct-to-consumer dairy brand in southern India. Akshay Kalpa increases sustainable and regenerative farming in India, which improves the nutritional impact of the dairy products, and also it's a certified organic milk provider. This company is doing well, of course. What the bigger problem in the company is the ability of the farmers to raise money from commercial banks and institutions and NBFCs because of the fact that they don't have any kind of collateral. What we did there was to provide under our kinetic innovation facility, climate innovation facility, we provided a partial guarantee program, a first loss program, to the NBFCs and banks, which are willing to lend to them against collateral, which is not the fixed property, which they don't have. So this led to ideate and harness different pools of capital to design and implement innovative first loss default guarantee structure, which is managed by a company called FinReach, to provide access to finance to Akshay Kalpa farmers. What this has done is improve the farmers. The farmers are able to buy more cattle, better practices, and Akshay Kalpa is able to mobilize this money from all the farmers and pay back the NBFIs. So what is critical here is our intervention in terms of impact. This is actual financial inclusion. Our ability to interfere and say that those farmers which banks are finding it nervous to take to provide them commercial money, could we provide them some kind of a first loss which improves the risk appetite for the banks to come in. And then we are now supported around 1,500 farmers. This can easily scale up to 10,000 farmers with our first loss provision. And on a period of time, once I have a track record, they don't need us. And also in Ayana, what we have done is in various solar sites in Ayana, we have developed skill development programs. The training programs in various solar sites provides with a special focus on women, youth, and marginalized groups. They are providing skilling vocational skilling. And we have now trained up to 1,000 plus youth in the country, and they don't pay us anything for this.
Right. But Srini, so much work is being done. It's profit with purpose, with so much impact. But do you think that impact investment is also, in a lot of ways, it means discounted returns? How would you defend that?
No, Neha. Nisha. I would say there is, we have seen over a period of time that there isn't actually any trade-off between generating impact and generating financial returns. You may have to be a little bit patient here because we seek out opportunities to make the most impact. And let me tell you, the impact fund managers are our extended arms, and through which we are able to generate commercially investing models which benefit the low-income population. So the investment stage and ticket sizes for some of our impact GPs are relatively smaller, but the ability to create the transformational impact in terms of their lives is very, very high. Now, the most important thing in this is our ability to come into a co-investment program with these GPs for their companies and incrementally add value to them. Because when we do co-investments, and we also co-create deals with them, not just passively co-invest, we co-create with them, which helps improve their ability to, and then we can focus on a number of areas. And we have a lot of tools internally as well. So there isn't any kind of trade-off between generating impact and generating financial returns. It does require a little bit of patience.
All right. So patience it is, but definitely kudos to impact-based investment and creating that critical infrastructure which remains underserved at the moment. And for a developing country like India, profit with purpose is the key word. Thank you so much, Neha, as well as Srini, for joining us in this very interesting discussion. And of course, the requirement of capital in India is large and it needs to be equitably distributed amongst various sectors, and that's where the DFIs play a critical role. Thank you so much for joining us. Thanks to our viewers for tuning in to Big Deal.